Well, good morning, good afternoon, good evening, traders, wherever you are. Welcome to Breakout Trading Answered, the show where we talk about all things breakout trading and sometimes stuff that isn't. And do we have a great show for you today? So grab your coffee, grab your beer, grab your hip flask, and welcome to Mr. Breakout's Tomas Nesnidal himself. Hola, Tomas. Hola.
Hola, welcome back to the Breakout Trading Answer Show. We're going to talk about breakout stuff. You actually make me to crave coffee, but I have to wait after we're done.
Now, I have a little confession to make, Thomas, that hola is probably the limit of my Spanish. And the only way I know Spanish is watching years of Dora the Explorer. So there you go. Hola.
Hola. Buenos días, buenas tardes.
I don't know what that means. I need to go back to Dora, watch a little. Oh, right.
Good morning, good evening, good afternoon.
So this is a very exciting episode in the series because I believe this one is the last one. Am I right, Thomas?
Yes, finally. Yeah,
Yes.
we've been promising that. Yeah, we've been saying that for a couple of weeks already. This is definitely the last one. Don't worry, not the last one of the entire show.
That's right.
That's not the case.
Yes.
But that's the last one of the series, which we call Making Breakout Trading Work. Then we have another project, another series, great series. So you're not going to miss anything. Please stay with us. But this is the last one from the How to Make Breakout Trading Work series.
That's right. So we've got some announcements to make about the next thing after this, which we might talk about maybe later today or another day. But we've definitely got something great to share with you after this series. So how to make breakout trading work, Thomas, we essentially went through every market group there is in the US futures markets, and we did European. That's right, isn't it? Yes, we did.
Yes, correct.
We did European markets. So how are we going to wrap all of this up today? What are we actually going to be talking about in this final episode of the series?
Right. So there's a very specific reason why we guided our audience through all the markets, because that was one of the aims, but it was not the ultimate goal. But the ultimate goal was give a full preparation for building a portfolio. And I think there's a lot of misconception in trading, where there are still a lot of traders who do believe that one system, one trading strategy in one market is sufficient nowadays to create a stable living from markets. Well, maybe used to be 20, 30 years ago, doesn't apply anymore. By the way, let me also mention, a lot of people used to believe this with crypto. A lot of people used to believe that it will go up forever. Now we're down to 20,000 from, I think it was 65,000, something like that.
Yep.
So, it's a tough lesson, but it's another lesson which just keeps pointing to what we've been saying here for months and months, which is if you want to create a stable income, you have to do it differently. No gambling, no just betting on one market, one system. You need to diversify, think portfolio-wise. And if you do this correctly, you give yourself a very realistic chance to create a stable, viable income from markets. I haven't figured any other way. Did you, Andrew?
No, not yet. Not anything that's legal, anyway.
Yeah, exactly.
All right. Well, that's a great intro for me to pull up the slides and get started. But first, I just wanted to mention as well that this show has been pre-recorded again. So this one isn't live. So if you're talking in the chat, thanks for your comments, but we can't see them. Thomas is on a business trip as this airs, and I'm moving house, actually. So if you could see my house right now, apart from this staged set background, it's a mess. I've got boxes everywhere. There's all this packing, unpacking. Well, no unpacking, all packing going on. So as you watch this, Thomas and I are both very busy, but we're coming back. The next one will be live again. So we can't wait to speak to you again in the chat and in the community. All right, Thomas. So let me fire up these slides and let's get started. Here we go.
So we're going to wrap this up by talking about portfolio, and we have a couple of points for you to understand. But first of all, I really want to set some realistic expectations here, and we have to talk about this, guys. I mean, a lot of, especially beginning traders, they feel kind of triggered when we say, well, if you're dreaming about making an income from one strategy in one market, it's not going to happen. And then a lot of beginning traders, they keep arguing. I mean, it's your money, but we've been in the market for decades, and we know Andrew. He on the Better System Trader, he did interviews with the best traders in the world. I met thousands of traders around the world, and we still have to see one trader who would be able to make stable living from one strategy in one market. So we really need to get it straight and set realistic expectations. So I prepared a small table. If we can move to the next slide, please.
Sure. As I do that, so Thomas, are you telling me that this guy on the internet who's trading penny stocks, 1 hour breakout on his laptop on the beach, making $1 million from his $1,000 account? Are you saying that's not realistic? Come on, man. I've seen the videos. He's sitting there in his Ferrari drinking cocktails with chicks in bikinis. Is it not true?
Oh, I might have. Maybe I'm doing something wrong. Maybe after paying millions of dollars in research in my hedge fund and being in markets for nearly 20 years and working hard on testings and meeting with all the great traders. Maybe I still need to discover the final secret. Maybe I'm not smart enough. I don't know.
All right, let's move on, Thomas. That's obviously a joke there. So here we go.
Yeah. So I just want to tell guys, like, there's nothing wrong on trading just one strategy. I think it's a great and quite inevitable start for everyone. And I think that we all had to start with trading one strategy on one market only for the sake of learning, building confidence, very important practice, because trading is also, even algorithmic trading is made of practice, especially practice when it comes to emotional resilience, experiencing drawdowns. And of course, one strategy on one market is better than nothing. That is for sure. But besides that, it's very easy to take one market and one strategy and overfit it. So we have a beautiful, steadily rising equity curve, which gives us an illusion of making stable income in markets. But that's just an illusion. That's not going to happen in real trading. And I've seen some guys who were able to pull up a strategy like this and profit with that for 2, 3, 4 months, but then it broke apart and they lost everything they made before. So, really, like, that's not going to happen. With portfolio, you're giving yourself chances at least to build a good stability. You're going to maximize your net profit drawdown ratio, extremely realistic goal for a portfolio. And that should be your final aim. You want to make most money with less drawdowns. So that's the net profit drawdown ratio. That's the metric you should be following. You will have shorter periods of drawdowns. You will have more of a predictability. And with a portfolio, of course, you will have a low probability of failure. This is another one that traders do not understand. If you have one strategy, one market, then have a look. Strategy fails, you're done. You're out of the business. Or the market goes crazy, like crypto from 65 to 20 or 60 to 20. I don't know exactly. You're done. You're out of the business. With a portfolio, 10 markets, 10 strategies, one market goes wrong, one strategy goes wrong, 30% of your portfolio goes wrong. You're still in the business and probably keep making money. Less money, but keep making money. So that's a big distinction. So if you want to gamble, all right, that's your right. If you want to make stable income, and that's probably why you are with us, then portfolio is the answer. And we gave you all the preparation. We gave you all the markets. We gave you all the time frames, templates. So you have a lot of great stuff to start with already.
Yeah. So Thomas, you just said there are multiple markets, and then a little bit later on you talked about crypto. So does that mean I can have different cryptos, the same strategy, and I'm diversified in the portfolio?
Yeah, that's a brilliant question. I wish it would be that simple, wouldn't it? Yeah. The other important aspect that we kept talking in this series a lot is correlation, right? Because the crypto markets, if you do a little bit of a research, and again, a lot of beginning traders, their biggest research is asking their neighbor if he already bought a crypto, and that's it. So if you do some serious research on the internet, the correlation between cryptocurrencies is quite high. It's around 80%. So that means if you take one strategy on a crypto and trade it on 10 cryptos, it's pretty much similar like trading one strategy with 10 different Bitcoins purchased on the Bitcoin market. So there's no difference. So when we talk about portfolio, you also need to take into consideration diversification. And that's what we've been talking about: metals, indexes, bonds, softs, meats, burgers, European markets, more burgers, coffee, and all the other great stuff. So you know that you have a plethora of markets that do have low correlations and can give you this opportunity to create something viable, so something meaningful.
Yeah. Now I've got, I know you've got a couple of examples here, so let me put the slides back up. Okay.
Right. So I started with a fairly good. This is an example of a fairly good breakout trading strategy. One strategy, and this strategy it's quite all right. It's a strategy from our database. This is 10-year history, and again, we presented a lot of strategies like this in the entire show. So just go back and have a look. But this is considered to be a good, viable, good strategy. Now, the point is that if you have just one strategy like this, you can see that you can have a long periods of stagnation, and these periods can be months long, which means you can be really not making any money for a while, and then this is where it usually all starts. Like traders, they get nervous. How will I make my living if I have these long periods of going sideways, which is quite natural? Maybe the volatility is not there, so it goes sideways. Who knows? Can be anything. So if traders get into a situation like this, they start tweaking their one strategy. And this filter and this profit target and this thing and that thing. At the end of the day, they end up with a beautiful, stable backtest equity, but live trading is a complete disaster. So it's not solution. Each strategy, individual strategy, needs to be constructed in a way that it can be viable. So that means you can only have a limited number of filters, optimization inputs. There are certain criteria, and once you put these minimum criteria, or these criteria which are really important to create a viable strategy, once you put them together to mitigate the risk of over-optimization, most strategies will look like this. Doesn't matter which market, can be futures, stocks, crypto, but you can't get much better than this with a single strategy, but you can definitely get much better than this with a few strategies on different low correlated markets. So this is a different story already, right?
Mm-hmm.
Right.
Yeah, very different.
Very different story. And the whole difference is four strategies, only four strategies instead of one. And obviously strategies which have very low correlation of the distribution of profit of losses, which can be tricky to find because it needs different markets. These all strategies are from completely different futures market sectors, different strategies. But at least you have something that gives you a chance, and you're not over-optimizing anything. You're not adding a billion of other filters on top of each other. You're just being smart and savvy. And now what happens if one strategy fails, which can happen? It does happen. Well, it can get a little bit worse than this. And nobody says your future performance will match exactly the past one. That's not the case. But you still have very, very good chances of having a viable business. again, just give me let me give you just a very recent example. There were people who put all their money into one cryptocurrency, $60,000. They bought one unit of the crypto of Bitcoin, and now they're pretty much out of the business. Whereas if you take 60K and you spread it 5 completely different markets, and I mean completely different, like again, different futures and different strategies with different logics inside of these strategies, well, then you're not suffering 60-70% drawdowns and losing your money very quickly. Probably you would be still making money or about break even, but it would be a completely different story. So again, very important.
Yeah, can you explain a little bit more about why you would expect to have? By the way, that mute button isn't working. Why
It
you
is
would?
not? Oh.
No, it's not working. Why would you expect the drawdowns to be smaller when you've got 4 strategies compared to 1? Can you explain the like the mathematics behind that?
Yeah, that's another brilliant question. So let me again get back to crypto. And again, I don't have anything against crypto. I think it's a brilliant idea. I just think it's not mature enough yet to call it a tradable vehicle. But let's say you have a Bitcoin, and let's say you have the Ethereum. Do I pronounce it well in English? Ethereum? I don't know if
what is it?
Ethereum, the other cryptocurrency.
I don't know. I don't know what that is.
I don't know if the pronunciation is correct. But anyway, you have a
You're on the wrong show if you want to talk crypto too much.
Yeah. So we have 2 different cryptocurrencies, and the correlation is 80%. Now, what really happens, 80% means that when one goes down, the second goes down as well. So you have a week, and out of that during that week, 5 days, one crypto A goes down $10,000, and crypto B, because there's 80% correlation, goes 8,000 down. So altogether, these, if you combine them in 1 week, you lose $18,000. Now, imagine that you have invested your money, or you're trading your money in 2 completely different futures vehicles. Let's say you have an index and a meat market. So you have E-mini S&P and you have lean hogs. Now, the correlation between these can be very low. I don't know exactly from my head, but let's say it will be close to 0. That means that if there will be one very, very bad week for E-mini S&P, you can again lose $10,000. But the second market, because it's got 0 correlation, it can make 5,000, and at the end of the day, you're not minus 18,000, you're just minus 5,000, which is a big difference. It can even make more money than crypto would lose in 1 week, or the S&P would lose in 1 week. So the whole idea is that when things go wrong, they don't go wrong at the same time on all markets. They can go on 1 or 2, but the rest can be making money, do way more pleasant things. And that's the whole idea behind diversification and creating a more stable income.
Yeah. All right. Well said. Very well explained. So now I guess you've shown us the benefits of individual strategy versus portfolio. And I think we're all probably sold on the portfolio results. So how do we go about creating breakout portfolios in as far as, from a high level, are there any specific rules or things that you would encourage people to consider when they're trying to, create a portfolio of breakout strategies?
Exactly. Very common question, isn't it?
How do you do it?
We do receive this question quite often. So I actually prepared 3 golden rules to creating breakout portfolios. And I think if you follow them, you should be fine. And these rules, I have to warn you, can be something a little bit different than you're thinking right now. So the rule number 1 is, drum rolls, voila, think big. Yeah.
Think big.
So there's only one key rule in creating portfolios. Do not limit yourself. And it used to be in the past, a lot of traders said, well, but I don't have enough money on my trading account. Well, that has changed a lot, because first of all, we now have micro futures contracts, which eliminates this problem quite profoundly. And second, if you don't have enough money to start serious trading and building serious business, then do something about it as well, right? Like we have guys who took on other job for a couple of months, or changed their job, or took some special project and I had to do it as well in past. When I wanted to found my first trading account, I had to take on a special job. So it's about dedication, how much you want it. If you want to become a profitable trader, create a trading business, you have to do something, and you need to create a better trading account. But fortunately, you now have micros, so you really can start with micros. And the only key point is you have to think big. So when traders ask me how many strategies do I need to have in my portfolio, it reminds me a question from the movie Wall Street, the part 2. How much money is enough? Do you know what was the answer?
No, I don't know the answer.
More.
I like that.
So
yeah.
that's the same philosophy with the portfolio. How many strategies? If I get a question, how many strategies in my portfolio? Well, more. That's the answer. Cool. With how many can you start right now? 2, 3? Well, perfect. That's better than 1. Start with 3. How about if you make some money and you can have 5? Well, 5 is more than 1, right? How about if I get an inheritance of $1 million? Well, do 50. 50 is better than 1. Anything is better than 1. Anything is better than 1. So just more. Just keep adding. Doesn't matter. Whatever you can afford at that moment. Even 2 is more than 1. Even 2 gives you already a chance, which is higher than with 1. So it doesn't matter. Just do not limit yourself, and do not encapsulate your end goal into some specific number. It's not that I would say 5 is ideal and you would encapsulate your mindset into 5 and that's it, because that's not the case. Think big, which means if whatever you can do at the moment, do it, but then keep expanding. The sky is the limit.
So with that in mind, then how far do you go? You're saying there's no limit. What are you saying? 1,000 strategies? 10,000?
I'll talk I'll show you something interesting later on. Okay. But to give you an answer, obviously there's a sweet spot. The sweet spot is different from retail traders and for a hedge fund. So for our hedge fund, the sweet spot is quite high. But obviously, the more strategies you start creating, the more you will start realizing there are some challenges with administration, with execution, which is all right. That's part of any business, challenges. So obviously you don't want to create thousands of strategies. There's no need for that. But when we talk about a retail trader, I believe that even for a retail trader, there's no reason why a retail trader should limit himself and not to open the mind up to dozens of strategies. I'm not saying hundreds, but I'm saying if you can make 10, 20, 30, that's a few dozen strategies. That will already give you an enormous edge. Just imagine you trade 20 strategies and 5 of them fail, which can happen. You still have 15. So that's a big difference. So again, I don't want to encapsulate the whole thing into saying 20 strategies. I'm just saying, even as a retail trader, if you start with a few right now, there's no reason why you couldn't trade ideally a few dozens in the future. Not right away, but maybe 2-3 years. Why not?
Yeah, okay.
Especially with micros, why not?
And so then what about the non-retail traders? Because I know we've got quite a few people who watch the show and follow our work, and we've got students in our elite mastermind programs. that managing money, or they're aiming to manage money. They've set up CTAs. They want to do hedge funds. What insights can you give those type of people who want to take it to a different level from the retail traders?
Right. So I cannot say the exact number here on the show, because that's a research we paid a lot of money for, and we share that with the elite group. So we do share it with our top traders, and they know that already. But I'm not allowed to share it publicly. But I would say, I remember, Andrew, that once Bob Pardo, who was a very successful manager, he mentioned that in his portfolio, if I remember well, he mentioned 80 strategies. Was it 80? I think it was about 80 different strategies.
Could have been.
Remember? Yeah. And I just can confirm that our research supports a number around this. So he already traded, I think 5 years ago. I think that was when he mentioned it. I believe it was 80. And that's for institutional clients. That's a number which seems, based on our research, very, very reasonable. And you definitely can go even higher than that. We do not see any particular advantage in trading hundreds of strategies, but you need to think at least around this number.
Okay.
For an institution or for a hedge fund.
Yep. Well, that's a good number for people to aim for. Now, I know you've got an example here. This is very intriguing. What is this?
Yeah, this is quite interesting. So, a lot of traders, they dream about equities like this, and they believe that they can produce this with one strategy, maybe because they see a lot of overfit and over-optimized equity curves on the internet, and losing traders bragging about their overfit strategies. But this cannot be achieved on a strategy level with a viable future, with a chance to make it work in live trading. So in our hedge fund, we did a lot of tests and a lot of comparisons. And this is a funny one, because we have a special framework testing different combinations and portfolios and correlations. It's quite sophisticated. And we pretty much ask a question: how many strategies would we have to get the perfect equity after all the costs? So it includes the slippages, it includes the round-term commission, which always makes it way more difficult to create a smooth equity. And what we did, we pretty much modeled the straight ideal equity curve, and then there was this algorithm who was calculating the least square and the perfect profit correlation. So it was an algorithm which were prototyping different kind of portfolios and suggestions. And anyway, so when finally computer did the job, and we got the perfect equity curve, which looked like this, came out that portfolio would have to have 384 strategies.
Wow.
Yes, 384 strategies. Now, the good news is that if you even if you get down to a few dozen strategies, it will not get that much. It will get different, but not that much worse. It still will be a very viable business. But to achieve perfection, that was our research. That this is not a sweet spot, because a sweet spot is something I call between ideal performance and the number of resources and administration challenges and all the other things that you need to really manage that amount of strategies. And I personally would not want to manage 384 strategies. That would be, from the administration point, it would be nightmare, unless we would have a very proprietary software done specifically for our needs. But I wanted to bring up this equity curve to really give everybody an impression. This was a serious research, and this goes way beyond one strategy. And that again, this is what it takes to get equity curve like this. And by the way, this is from our database, and a lot of that are out of sample. I think from 2018 or from 2019, when you see there's a high density of blue dots instead of green dots, that's the true out of sample data which we collected during the last years after strategies were created. So this is quite realistic. This is not a nonsense output. This is how it can really be in reality. But it takes 384 strategies, and with one strategy, not maybe for a couple of months, but that's it. Then I always saw how strategies fall apart quickly. So quite interesting. It's a staggering number of strategies, actually.
Yeah, that's a lot of strategies. But very interesting to see that it's continued basically with the slope from the blue dots. Right. You see a few more blue dots, but I guess it's hard to judge the drawdown there because the scale is so large. But yeah, it does appear to keep the same kind of angle in the equity curve. So
exactly.
That proves your point,
and of
right?
course, yeah, and some strategies failed, right? Like it's 384 strategies. We still have about, I don't know, 10-15% failure, or maybe up to 20. I don't remember the last number. But there's a good chance that at least 50 strategies failed there. So, you don't even notice 50 failed strategies. So it's, again, that's the power of portfolio. And I don't want to discourage anybody by this, because this can be translated wrongly and understood like a discouraging information that you need 384 strategies. That's not what I'm saying. I'm just saying you need a portfolio. You saw that you can do well with 4 strategies already. So, I mean, 4 strategies is better than 1, and it's already a good start. But, if we're saying think big, this is how big it can get.
Yep. All right, so that was number 1. Golden rule, think big. Shall we move on to number 2?
Please.
Here we go, coming right up.
So rule number 2 is think futures, and that's why we designed the whole series making breakout trading work around futures markets, and we covered in details all the benefits of futures markets, and that's from my understanding the easiest and fastest way to build a profitable trading business. And I want to give you a very, very practical tip which will get you for understanding of this. So on the next slide, I used a screenshot that I used when we were talking about grains. And with the grain series, with the episode about grains, I showed some very, very low correlation between an index and grains. And on average, you can get -8% correlation, which is close to 0, which is phenomenal. And this can only be achieved with futures. There are not other vehicles in the world where you could achieve such a correlation. Even if you take stocks, ETFs, it's very, very hard. The correlation among these markets, it's in general way, way higher. And correlation is the key to diversification and stability. And the tip I wanted to give you is that you can actually get this matrix on the link, which you can see at the bottom of the slide, which is mrci.com/special/core180.php. It should be visible there. And it's a very helpful link, because this is being updated. So we definitely should have already more up-to-date numbers. And you can use this correlation matrix. If nothing more, you can use it to decide which markets to choose for your first strategies. If you already know that your trading account will not allow you to, trade more than 3, 4, 5 strategies or markets, well, get this table, see what are the smallest correlations, and pick your 3, 4, 5 markets, and you already are off to a great start because you already are thinking like a professional trader with low correlation in mind, and that will make a hell of a difference compared to all the other naive traders, not even understanding how a profitable, stable business in trading is made. So this is a very, very helpful table, and you should study it. You should fall in love with this table, actually, if you want to be a consistently profitable trader.
Yep. All right. That's very handy. Thanks for sharing that link. So that was number 2, think futures.
Yeah.
I don't have any questions for that. It's pretty self-explanatory, right? So should we move on to,
Exactly.
That's number 1, number 2, number 3. Here we go.
Yeah.
Maybe a mouse problem. Here we go. Rule number 3, start easy. What does that mean?
Right. Yeah. So, again, there's a lot of confusion and misinterpretation when I talk about portfolios. So not only traders, even the traders always ask me how many strategies and how many markets. But, when you say a portfolio, a lot of, especially beginning traders, they feel anxious about it, which I understand, or overwhelmed, which I understand. It can be very overwhelming. Like thinking portfolios can be super overwhelming. Like, how do I even create so many strategies? Because a lot of traders, they struggle to create a lot of strategies. So if you struggle to trade viable strategies, one of the solutions can be our Breakout Strategies Masterclass, because we created thousands, both Andrew and I, we created thousands of viable, robust, high-quality strategies. So if you have a framework, proven framework to create high-quality strategies, you will not have this problem anymore. It's not that difficult to create a lot of viable strategies. But the point is, we have to start somewhere. And there's no way to put any pressure on yourself. So again, 2 is more than 1. That's my philosophy. 3 is more than 1. Sometimes I go to gym and I'm lazy and I don't want to work so hard that particular day. So I go to gym and I just stay for 15 minutes there instead of 45 minutes or 50 minutes. I do very quickly. 1, 2 exercises, 15 minutes, and that's it, because I don't feel like, doing more. And I'm still happy with this because 15 minutes is more than 0. Like I had a choice not to go at all, which would be 0. And I went just for 15 minutes, but 15 minutes, it's 100% more minutes than 0, right? Like something that I know this is a silly example, but it's like, it's tremendously more than 0, and it's same with these strategies. So if you're starting out and you have nothing and you build one strategy, then you have 100% more strategies than you had the day before, which is encouraging. That's great. You have one more strategy than you had the previous day. 1 is more than 0. Now just go with the flow. Maybe you'll have your second or third strategy in a month or 2 months. Doesn't matter. What really matters is that you got on this journey, that you're actually doing something, because a lot of traders, they just intellectualizing and overthinking and studying, and they keep doing this for years, and the only result is that they are so smart that they cannot make any decision anymore. So the point of this business is just to go out and start, and doesn't matter. So that's what I mean by start easy. Because if you start just with one strategy, the chances are that once you create first strategy, you already know how to create second, third, and fourth. And in a couple of months, you can have your first portfolio of 5 strategies. And 5 strategies versus 0 strategies, that's a huge, huge difference. So don't be so preoccupied about which markets. Do not encapsulate your trading journey into a specific numbers and things like that. First of all, you have to learn creating this strategy. Second, you need to understand correlations, study the MRCI table that I just shared, and get some perspective, and then just go with the flow. typical example, which I still cannot believe it, but for me, the typical example is when I started with my hedge fund, I started super easy. My only ambition was to collect about $5 million for a couple of friends. Each of them were, wealthy friends or not so wealthy friends. Some of them would put $500,000, some of them 100,000, doesn't matter. Just pull this money, something very, very small, no pressure at all. And that was, to me, easy. Well, turned out a few years later that now we're very realistically talking. It's a talk. I know it's just like, it's not an actual thing yet, but it's heading there. We're very realistically talking about what would it take to actually place into markets 1 billion euro, which is maybe 1.2 billion US dollars. And it all can only happen because you take the first step. My first step was, we started with $100,000, which were my own money and my friends' money, and that's how we started. And that was the first step. That was the best we could do at that given moment. And starting a hedge fund with 100K, it's 100K more than starting with zero, right?
Yeah, right.
And it just this snowball, it just keep going and keep going. So start easy. Whatever you can do right now, it doesn't matter. It really doesn't matter. Whatever you're capable of doing right now, even a smallest step, do the smallest step. It's still better than sitting on a couch, procrastinating, complaining. Even if you start by taking on a second job for a while to build your trading account, that's something, and that something counts, and that's better than nothing. This is a beautiful phrase that the Jordan Peterson, he always says in his books. Jordan Peterson, he says that a lot of people think that the small contribution or small thing they do or have, that it means nothing. But he always says, well, it is something. It doesn't matter how big it is, doesn't matter what it is, but it is something, and something is always better than nothing. And that's what I mean by start easy.
Yep. Well, you've set up the quote of the show very nicely, and I accidentally just displayed it a little bit on the screen, so I've given it away, the surprise away a little bit.
That's okay.
Sorry about that. I mean, itchy trigger finger. So how about we do this, because you've set it up perfectly. So
right.
Yeah.
Great quote from the Wall of Wall Street and We. The only thing standing between you and your goal is the bullshit story you keep telling yourself as to why you can't achieve it. And that's okay. Like, I do have bullshit stories for myself every single day, with gym and with trading and with everything I do, because I'm a lazy person. That's why I live where I live. But it really is the only thing standing between you and your goal. I can't even express how many excuses I hear constantly from beginning traders, and it's exhausting. Like, they come to me, they ask me for advice, and then I say, like, choose a couple of futures markets, do this, do that, and then all of a sudden excuses begin. But I don't have a TradeStation account. Well, open it. You need $2,000. That's nothing nowadays with today's inflation. For $2,000, soon you won't even be able to purchase a good dinner. So that's nothing. You can open the TradeStation account within you fill up the forms within 30 minutes. Like, that's not an excuse. So you don't have a TradeStation account, so you're going to throw away the whole opportunity of trading business because you're lazy to open a trading account and found it with 2,000. Or I don't have a money. Well, then you can start a business. If you don't have a money, you have to do something about it. Just save money. Just, cancel your Netflix subscription. Just waste of time. Take on a second job for 6 months, make some money. It's possible. We all had to do it. And make some money and, just start trading micros. But, people have so many excuses. And if they have so many excuses, probably they don't want to create a viable trading business. Maybe they're not serious about it. maybe they live in a great times of having enough of everything, being abundant with money already, feeling complacent. Maybe they don't have drive. Maybe don't want to commit to anything. But these are all your buts. These are all your excuses. So what do you think will happen if you will be holding on these? Just get rid of these attachments. That's it.
Yeah. If you want something bad enough, you'll find a way, right?
Exactly.
Step by step. Yeah. All right. Well, that is an excellent end to your presentation, Thomas. Very inspiring. So,
glad to hear that. By the way, I just noticed the camera is flickering. I don't know if you can see it.
I've seen it.
I don't know. Yeah. I apologize. I don't know what it is. So maybe next time I'll need to restart the computer. I just noticed. So
that's okay. We're not here for the camera angles. We're here for the content.
Okay.
And you've shared great content today. You can do the show in your pajamas. We wouldn't care. Or maybe you wear that to bed. I don't know. But yeah. So
next time.
Yeah. So what I wanted to mention before we finish, I've been trying to remind myself this the whole show. So I'm glad that I can finally get it out. We have a special download for this series. Where we've taken, because we did so many different episodes in different market groups, and Thomas shared a lot of information about session times, the best trading times, timeframes, things like that. So we've consolidated all of that information into one handy PDF, I guess, like an ebook kind of thing. So it's super valuable, and there's going to be a link below the video. You just go there. I guess you enter your email address and we'll ping you, we'll email it to you. But that's going to be an excellent way to get a summary of all the information that we've shared across this entire series. There's been heaps of stuff that we've talked about. So that's make sure you look for that link below the video, click it, and grab a copy of that. It's super valuable. So now, Thomas, is there anything you wanted to say to, I guess, kind of wrap up this show? Or the series?
Yeah. I've been a little bit on fire last couple of minutes, but I've been in this situation with these excuses quite often. So it always puts me on a fire. But I understand that sometimes it's not maybe the complacency. Sometimes maybe just, being in the right environment, because we all know how it is difficult even to explain to your family what you're doing. Like a lot of traders, they can tell their family or their friends what they do because they're being immediately judged. Like, oh, trading, you're a gambler. They don't understand this can be a serious business. It can be a business that can be built on a very strong foundations. So sometimes it's just the environment. And I understand it's challenging to be part of a good environment because on the internet, all the forums, trading forums, oh boy, that's a crap. That's a hole of depression quite often. And it's really difficult to find a good trading environment. So first of all, that's why we are here with this show, always ready to help you create a community, create a good environment. Of course, there's a tremendous amount of inspiration on Andrew's Better System Trader podcast. That's one of the most sparkling source on the internet for algorithmic traders. But also, I want to say that, in Better Trader Academy, one of the things we're pretty proud of is that we have a great community of traders. Inside of the Better Trader Academy, we have a special community forum, and we have, first of all, we have professional traders there, elite traders, guys who already manage money. So there are some very, very professional, skilled, experienced traders. Of course, there's me and Andrew. And we're pretty proud to say that we managed to build this community. We also do live hangouts every other Thursday. So I reply questions in the community. We talk about stuff. And if you're, please don't get me wrong. I don't want to, sound like a salesman, but it really, I would say, if this is your struggle, we do have couple of entry-level products into Better Trade Academy. And if nothing else, it gives you an access to a really astonishing community. So without trying to sell you anything, which is not the intention, I'm just saying you still have an option to get to be a part of a better environment. And of course, it's not free, because we don't want all the freebies. They're complaining that they have not made 1,000% on their $100 Forex Piccolots accounts. That's not what we want to attract. So of course, it's not for free. It's for people who are serious and can afford, to do something, to be part of this high-level education. But that can be a good solution for everyone as well. So I just wanted to bring it up that there are always ways to solve all these problems, even with the right environment.
Yeah, exactly. So if anyone has questions about that, you can just email the support team, and it's on the screen there, support@bettertraderacademy.com. Not just with trading questions, but if you're interested in any programs to help you get started or to improve, then they can help you out with whatever you need. So that's the support@bettertraderacademy.com. And please, if you've enjoyed the show today, Tomas has been on fire the last 10 minutes. Incredible. So thank you, Tomas. Please give us a thumbs up for this video, and hit subscribe and the bell button so that you're notified when we release new content. Now, we do have a new series coming up in 2 weeks' time. I don't know if we should announce anything now, Tomas, or maybe we should keep it a little secret and do another announcement later. What do you think?
I'm thinking maybe let's keep it a secret. Maybe
Okay.
we will change our plans and we will create spontaneously different series, which will be called Mr. Breakouts on the Fire.
On fire. Yeah.
Mr. Breakouts on Fire.
Yeah, Breakout fire. Exactly. So, well, if there's nothing else, Tomas, then I think we can wrap this up. It's been an excellent show, an excellent end to the series. In fact, the entire series has been incredible. So I wanted to mention to you actually that I took some of your insights from the European, when we did European markets, and you had some specific stuff about FGBL, which we haven't tested very much. We have now, and we've got incredible results. So I haven't prepared anything to share with you this time, but maybe we can do that in another episode, just to show people that the information that you're sharing does work. And we've built some amazing strategies for European markets based purely on the information you shared in that episode. So I recommend everyone go download the PDF link, the link at the bottom below the videos, and get that info, and then go back and watch the videos. There's so much great content and little nuggets of information that you can get from those. So thanks for sharing all that, Tomas, and thanks everyone for attending this How to Make Breakout Trading Work series. And I think that's it, Tomas. Do you want to finish it, wrap it up?
That's it. I have nothing else to say today. Thank you for being with during the series with us. Thank you very much, Andrew, for all the savvy questions, which definitely helped a lot to deepen the understanding and clarified a lot of things. So I think we're all quite satisfied with the result, which is good.
All right, excellent.
Mostly, I hope the audience. Yeah. Mostly the audience seems to be quite happy with the result.
Yeah. Excellent. All right, well, let's wrap this one up. Thanks for joining the Breakout Trading Answered show. I keep getting the name mixed up with the How to Make Breakout Trading Work series. And we'll see you at the next one. Happy trading.
Happy trading.